Well, hello. It's Sunday afternoon and time for this week's market report. I'm going to try and keep these a little bit shorter in future so that you don't have to listen to me waffle on and on and on for hours on end. So I'm going to try and keep it to sort of 20 to 30 minutes. But remember, if you want my daily strategies, you can go across to the Twitter link, which is next to this video, or you can sign up for my daily free reports, free for 30 days at least. There's a 30-day trial. There's a link on the right-hand side of this video for the website, ArcisFX. Oh, and by the way, I've changed my name from the trading clan to ArcisFX. Arcis is Latin for fortress or stronghold, and also happens to be Sanskrit for a light or a beacon. So it's a very good name in terms of what it means, and I think it sounds cool, and it's quick and easy to type. So there you go, ArcisFX. So if you go to the website, you can get my detailed daily report on the Forex majors and some of the minors, plus equities and commodities. And if you don't want to have to sign up for that, you can also go across to the Twitter feed, and the link's also on the right-hand side of this page. Let's have a look at the markets. Okay, so we had a fantastic week last week, making really good profits across a variety of different trades. One or two were not great, and I'll go through those in a minute. But on the whole, we ended up with a really, really good result, and I'm very pleased with it. So let's have a look at what happened. Let's go across from the left, top left down to the bottom right, and have a look at them one by one. So we're going to start with the Nasdaq. And of course, the big question is are we now out of the bear market into a bull market? And I would say possibly. Just want to get rid of this. Possibly we are. I don't know. In fact, no one really knows. If you have a look on the internet and various financial houses and their commentaries, there'll be opinions of both directions. I personally think that we're going to test the lows again. The reason for me saying that is because in most bear market recoveries, I'm not going to highlight it now for the sake of space, but again, you will find more details of this in my daily report if you sign up. But in most bear market rallies, for a start, we'll test the bottom and possibly go lower. And in most reversals from a bear market into a bull market, we will often tend to get a bit of a bottom forming process taking place, wherein we'll come back and test, maybe make a little false new low, rally up a bit, bounce around at the bottom, and eventually start to move up. It doesn't happen overnight. So for those of you who think that they've missed out on the bull market start, or they've missed out on finding the bottom, I don't think that's going to be the case. I could be wrong, of course, but I think that we're going to have some more opportunities to buy. And I know we're in a bear market, but you'll know that I've been buying because we're very overstretched on the short side. And if we don't bottom out at this level, we will probably bottom out in a few levels beneath us. And I've got orders set up all the way down to about 9,000, which is around, so there's 10,000. I'm prepared to buy this market all the way down to this 78.6% Fibonacci. And it just so happens that I got into the trades on Friday. It's my trade of the Friday, not last Friday, the previous Friday, but this is my trade of the week, getting in there long. I took about, close to 1,000 points profit on that late on Friday. So what are we going to do next? I don't know. Are we forming a bottom? Possibly. If we are in the process of forming a bottom, we'll probably get some more tests of these lows, or at least this low over here. So that would form a head and shoulders, inverse head and shoulders pattern. If we rallied up a little bit, came back to test this orange line, formed the right-hand shoulder. So this would be the head, left-hand shoulder, right-hand shoulder, back down towards this area, and then up again. That's quite a common bottoming pattern, so that could happen. What are we going to do going into next week? Well, right now, I'm just actually going to do nothing. I want to see what happens. I'm very tempted to sell if it goes a bit higher, and I think it will go higher on Monday. The reason I'm saying that is because Friday's candle was a perfectly, well, not quite perfectly, but pretty close to it, clean candle with no wick at the bottom and virtually no wick at the top. This is a very bullish pattern. It doesn't mean it's going to continue on strongly up from here. There's another example of it over here. In fact, these two candles, just have a look to the left. You can see two similar candles in a row. In this case, there were two in a row. Here we've got the first one, possibly. The second one might look a little bit like this. Or this might be like the second candle over here, and we'll move a little higher and then jiggle around and then move back down lower. I don't know what's going to happen. I'm very tempted to sell at this moving average up here. I was tempted to sell at this moving average, yes, on Friday, but I didn't, luckily. But this would be a good area for a sell, possibly. If we speed up to that sometime, at least it'll be good for scalping. If you're a scalping trader, wait for us to get up to this level. Why that level? Well, just better make sure that I'm not being incorrect about this. This is the 50-period daily moving average. It also happens to coincide with the lows over here. And if I put a horizontal line on, let's just do that. Put a horizontal line right there where the 50-period moving average is. You can see it was previous support in that period over there in June. So that will become resistance. And if I sort of zoom out, you can see just going back to here. So there's the 50 right there. So it's this line here that we're talking about. And you can see it was previous support and resistance in that period in 2021. So that would be a good place to sell if we got a sudden dash up to here. Probably not a good bet for a reversal back down again. It might do that, I don't know. But certainly good for scalping. So if we get up to 12,454.3, that would be a good place to scalp at least some shorts out of there. That's what I'll be looking to do. I'm going to either scalp some shorts out of there or get into a short position, move my stop losses to break even as soon as possible. And if I can do that and the market starts moving lower, I'll be in a short trade for no risk at all, and I'll be aiming down for these lows. So that's the very, very key area on the Nasdaq. Are we going to test these bottoms again? I don't know. We could test this level, as I said, forming a head and shoulders, inverse head and shoulders formation. We might be bottoming out now, or the market might just be taking a breather. I think on the whole, all the market indicators are the broader market indicators. I'm not talking about these charts or the Nasdaq or stocks or anything to do with stocks and equities. I'm talking about the general economic situation, interest rates, war, recession, gas prices, etc. We'll talk about gas prices in a minute, but all of those indicate that we're going to struggle to make a bottom. We may make a bottom, but it might be a slow process, which means we'll continue to retest some of these lows. With a bit of luck, that'll happen because I want to buy again back into the market at this level over here near the bottoms and even lower if we get that opportunity, which would be a fantastic opportunity to get long on the Nasdaq. Now the S&P, very similar story. I don't think I'm going to be repetitive here, but I've actually got an order in here, and I'm going to try and show it to you quickly. Let's just quickly show you a very, very small order. Let's go to settings and orders. There we go. And there you can see it. It's on the screen. A sell order. I think that's a pretty good bet. You can see it's a very small order. Why do I like that? Well, a number of fantastic reasons. Number one, there's the 50-period moving average. So by the time we move up to this price here, we'll be at the 50-period moving average because that average by Monday will move down just a little bit. So it'll be just about on that line. Secondly, it's a downward trend line, which meets perfectly at the same price. 50 MA, downward trend line. Thirdly, it's the 38% retracement from this recent move down, precisely at the same price. So that's at 4020. I'll be looking to sell the S&P there. Same strategy as for the Nasdaq, either a scalp into a move down, a reaction at that level, either a scalp off that level, or if it moves down fairly quickly and drops sharply off there, I'll keep the trade open, move my stops to break even, and hope for a move down to at least this level here. As you can see, previous support. And again, we have this potential inverse head and shoulders pattern formation. So that's what I'm looking to do on the stocks. Sell early in the week, very tentatively in a scalping manner. And but if we do get a sharp drop off those levels, I'll move stops to break even and try and hold those positions down to the supports at the head and shoulders pattern sort of target level. Okay, I think that's pretty simple. So let's get rid of let's just get rid of these trading. I don't want to reveal all of my trades, so I'm going to take the trading orders off. I don't have any open positions on the Nasdaq or on the S&P. In fact, on this chart, set of charts in front of you, the only open position I have is on the dollar yen, and we'll talk about that shortly. Gold, very quickly. Nothing much really. I hold the same views as I've had for a very long time. First of all, don't diddle in the middle. Not only are we in the middle of a much broader range over here, this whole area, we're sort of right in the middle of all of this, but we're also in the middle of this much smaller range between all these moving averages and trend lines and support lines. We're right bang in the middle. It's not worth taking any position. I'm looking for a move down into these 1700s, 1780, 1760. If we do get down there, first support is here at 1780, 1790. Might have a little go there, maybe. Don't think so though, because we'll have broken down through even more important support. But when we get down to 1760, that looks interesting. So nothing for now on gold. We haven't been in gold for quite a number of weeks now, but it's not worth it. And you can see, in fact, even if we had been in gold, we were in gold actually, long from around here, if you remember, but that was quite a long time ago. I think a couple of months ago. It moved up a little bit. We took some profit, but since then we've been holding beneath this, the underside of this upward trend line and the underside of this downward trend line. We've got a little apex here and a bunch of moving averages, and the whole thing's very messy. And yeah, in the broader macroeconomic sort of perspective, I think that metals are going to struggle a bit. So let's just wait and see what happens with that one. So nothing to do on gold, just keep an eye on that. I always have it on my screen so I can see what's going on. Bitcoin, let's have a look at this. Well, you know my position. I'm in here at about these levels. Actually, I'm in long. I'm willing to take a bet that we'll hang around here a bit more. If we drop back down to about 20,000 or even these lows at 17.5, I'll be looking to buy some more, but not so much as I would be interested in a drop down to 1,300, which is right. So that's the support that we're at now, that previous resistance. Let's see if we can. So there we go at about 20,000. So not 1,300, 13,000. There's 20,000. Next support here, 13,000. That's this one. And I'll be even more interested in buying Bitcoin in there. Some people think it might go down even below that, down to these sort of support levels at 3,927. I don't think that's going to happen. 3,900, no, I don't think so. So I think I'm trading this more as an investment than a day trade. I'm not day trading Bitcoin, but I've just put some money in at the current support. Next support at 1,000 rather. Gosh, if it was 1,400, we'd all be in a bit of trouble. But 14,000 next support level. So yeah, nothing to do on that. That's just a buy and hold for me at the moment. If it drops lower, I'll buy some more. So I don't day trade that at all, as I said. Oil, I think this is an interesting one. We're still edging lower. We're heading down towards these support levels here. We've got one support level at this red line. We've got another one at this rising trend line, which has been very important up until now. But if we do drop down through that one, we'll get down to about 98 98 on these OANDA prices, the CFD, I think it's CFD prices. This closely follows the actual Brent crude oil price, but it's slightly different for some reason. It doesn't really matter. A chart's a chart. But if we get down to this line here, these lines here, actually, I think this is quite good again for a scalp. So where this red line, this horizontal red support line meets the rising shallow trend line, this purple one, and also the 78.6% fib, which is this line above the blue block. All of those are in confluence together. That's always a fantastic sign for me. So I'll be looking to edge into oil here. I'm either going to, I haven't decided quite yet, but I'll either be buying a bounce here for a scalp and then stops to break even if I can, or I'll take a position here and then a very small position there and more smaller positions as we move down to these supports here. But I think this is a good bet, this area here. So when I say a small position, certainly not a full-size position, but something in between. Not tiny, but not big. So first support at about, on these charts at least, 106.2. And I like it very much. Confluence of a trend line, horizontal line, and the 78.6% Fibonacci level. So that's my strategy on oil. And of course, I update these on a daily basis to my subscribers, but I also share a little bit of this on Twitter on a daily basis. So these are just general strategies for the week lying ahead. They're not sacrosanct. They're not cast in stone. They're not set perfectly. They're just general ideas. So that's a bit like a sticky note, really. In fact, I've got a sticky note on my email, which you can have a look at. It actually says sticky note. There it is. So what I've written down here, I send myself an email and I write these things down, and then I've got it in my email inbox, and I just glance at that every now and then when I need some confirmation of what I'm thinking. This is what I've set up in my mind. Doesn't mean I'm going to do exactly what it says there. These are general guidelines, sticky notes. Always good to do this if you're trading yourself. Make yourself a set of notes. You might just be trading currencies, euro, pound, yen, Swiss franc, Aussie dollar, that sort of thing. Make yourself a sticky note and say, this is what we want to be doing. You can see I've got euro and pound. Look at levels above and below. We're range bound. We'll have a look at that very shortly. USD Japanese yen, short position. We're going to talk about that right now. Pound South African rand. I'm in a long position. It's not looking great, but that's okay. It's a very small position, and we've got lots of space below us before we hit the stop loss. USD ZAR, leave alone. That triangle pattern failed, but it was a very tiny stop loss, as I advised. Nasdaq, sell rallies or buy dips. We've talked about Nasdaq. We've talked about S&P Gold. Buy dips to 1760, 1780, much later. So again, we've talked about gold. Don't diddle it in the middle and wait for something to happen. We don't want to be playing around in the chop. Oil, buy dips, see charts for support levels. We've just talked about oil. We've talked about Bitcoin looking good above 20,000. There's one that I've put on here, natural gas. Looks like a buy, major resistance, now support and oversold. I want to talk to you about natural gas. Let's just go back to the charts. First of all, before we do that, let's have a look at the dollar yen. And the dollar yen, well, I'm short on this one, quite significantly short. I've explained the reasons in previous videos. We're incredibly overbought. We've got some problems with this currency. The Japanese have got some problems with the currency. The dollar has a problem with being too strong. The yen has a problem with being too weak. The Bank of Japan has said that they're not going to make any intervention, not going to do anything concrete or solid or dramatic or sudden to ease this situation, but it's creating problems with their economy. And I think that we're going to hear something in the next week or two about what they might do to try and solve this situation. And they may, in fact, even increase interest rates or intervene by buying a whole bunch of Japanese yen, which would actually be the opposite of what they've been doing over the last couple of decades. Because when we were down in these areas here, we're going to switch to a weekly chart. It's very interesting if you trade the Japanese yen. Let's go back to, let's have a look at a monthly chart. So I started trading this currency back in this time period here, actually in the early 2000s. It's not so easy to see on the monthly chart, but on the weekly chart, let's see if we can have a quick look. Anyway, what I want to illustrate to you is that the Japanese used to intervene in their currency by weakening it all the time. They didn't want it too strong. They got a sweet spot at around 120 to 130, 125, let's say, is their sweet spot in terms of their economy between exports and imports and the way it's all structured and inflation. They don't like inflation at all. But there we go. That's between, this is when I first started trading the yen, 2002. This whole period here, every time you see a dramatic rise in this pair, around 115, I remember it perfectly because we would know when the Bank of Japan was about to intervene, and we would simply sell the yen against the dollar. In other words, buy this chart, and we'd make money every time. And it happened as many times as you could count. So all along here, that's what they were doing, trying to weaken the Japanese yen. And fast forward to today, well, look where we are now. Right up here. Now they're trying to strengthen Japanese yen. Are they going to do anything dramatic? Possibly not, but there are certain indications. Anyway, from a technical point of view, chart's incredibly overbought. We need a correction. If you look back on historical rallies of this nature, we've gone about 1,000 pips up with only one minor correction. Every time that's happened, we've had quite a significant correction. I think we're going to probably, and things never work out perfectly in trading, of course. If we could all predict the markets, we'd be billionaires overnight. But probably we're going to come back to down to about 127. I think much better chance of coming down to at least 131. We're at 135 now. So I'm still short on this and waiting for a move down. This will be my trade of the week next week if it happens. So short dollar yen. I've got a couple of positions higher up to continue to sell because it's very possible, as always, that we'll get another spike higher. Probably if we do to around 138, maybe 140. I've got orders up in those areas. So I'm going to be holding this for at least a week or two, maybe even 3 or 4. So, but my target 131 and then potentially 127. All right, so that's the dollar yen. Now, I think we've covered all of that. The Nasdaq, the S&P, gold, dollar yen, Brent crude oil, Bitcoin. We've covered all of those. Now let's have a look at some of the other currencies. And I'm going to switch across to my other charts and try and rearrange this. So just give me 1 second. Okay, so this is a little tricky because this is not aligned properly the way the recording software is set up. So I'm switching between the TradingView charts and the Oana charts. So anyway, let's try and just use what we've got. Otherwise, I'm going to have to make 2 separate videos and stitch them together. Okay, euro. Now, you can't see the pricing on the right-hand side because of the way this recording setup is working. But you can see the euro. They've got a 4-hour chart here on the euro. If you remember on the 16th, 17th, we had one big rally on the euro. We traded this bottom beautifully. Remember, we bought off this bottom. It was it's a long-term low, same as we have on the pound. We bought this, got a good profit on that. But since then, that's the 16th or so. It's now the 26th. So 10 days, not 10 trading days, but 10 days later, we haven't gone anywhere. Where are we going to go on this? I would say probably up, but we're in the middle right now. I think we'd probably go up for now, but I'm looking for a rally. Let me just show you very quickly. See this line here, this dark brown one. There's a dip there. The price, incidentally, is at 63.40, which you can't see. It's a pity. But there you go, it's 63.40. That's that price. It's also the 61.8% fib. It's previous support there, previous resistance here. And if I scoot back a wee bit further, was there something else? I think possibly, can't see now. But it's a pretty important line there. In fact, very important. Now, again, the same as the Nasdaq and the S&P and oil, I'll be looking to sell at this level. The level is 63.40. And I'll be looking to scalp that. And if we get a dramatic move down off that level, I'll be looking to hold that short position back down all the way down to this next one of these brown lines, this one or this one. So I'll be looking to sell there, either scalp it. If it collapses and I can move my stops to break even, that'll be great, and I'll look for a move back down to here and possibly down to here. Otherwise, I'll just be looking to scalp it. If that one fails, I'll be looking to sell higher up. This is at 1.08. 1.08. So this is 1.080640, not 640. I think I said 640 earlier. 1.0640, actually 34, but let's call it 1.0640. This is about 1.0680. These are the selling areas, and I'll be looking for a move back down. That's the one possibility, and you'll see the same applies very much to the pound. If we don't move down, if we don't move up and we move down instead, I'll be looking to buy at these lows. So, but I'll have to update closer to the time on those because they're depend on which way the market moves, really. Same thing on the pound. You can see there was the big move up. This is also a 4-hour chart, and since then nothing's been happening since the 16th, 26th now, so nothing at all. So same thing. You can see we've got a downward trend line here and some moving averages above us and some fib levels. So we've got a 61.8. We've got some previous support, which now become resistance. Support there, support there. This brown line is the most important one. It's also where the downward trend line is, and I'm going to try and switch this across to the daily charts. I think that's going to be a problem. I think I'll just pause. Oh, there we go. So there you can see it's possible as well, very similar to Nasdaq, S&P, that we'll get an inverse head and shoulders here. So that means there's the left-hand shoulder, there's the head, and we'll move up there to this brown line. Very important, even this line where the trend line is, which we pointed out earlier. By the way, that trend line, the downward trend line, you can see the prices on there. So even though we've got it chopped off and you can't see on the right-hand side, you can see some prices there. This downward trend line also happens to be, which moving averages? Yeah, 50 period moving average. So same as the Nasdaq and S&P, 50 period moving averages are in play. So this downward trend line, 50 MA, horizontal previous support line here. This one here, sorry. So previous support, beautiful, and kind of resistance. Okay, it went through there a little bit, but support, Fibonacci level, downward trend line, and the 50 period moving average. So I think that's good. I'll be looking to sell at that level first of all. As I said, scalp or hold if it bounces back down dramatically and I can move my stops to break even. And then for a move back down to form a right-hand shoulder down somewhere down here. So that's the pound. Okay, let's have a look at the dollar against South African rand. Well, that's a weekly chart. Let's go across and have a look at a daily chart. And we had a little triangle here, which failed. Okay, so, but, you know, I lost a few pips, that's all. So we had this triangle, if you remember from one of my previous videos, and my strategy here, so you can see it's failed. My strategy here was to buy on a break through the top. That never happened. Or to buy it when we approached the bottom inside this triangle, when we approached there, to buy there for a move back up. Stops very tight just beneath that trend line. Well, as it happened, we got stopped out, and I think my stop loss was about, I don't know, equivalent to 10 pips on the euro or the pound. 12 pips, I think it was, so almost nothing. But if it had worked out, it would be fantastic, because then I would have bought more on a break above here, above the support line and the downward trend line, and for a move back up to around about 17 rands to the US dollar. Right, now let's have a look at the last one. And the last one is the, you can see my trade positions in here. Oh, you can't actually see them, they're off the chart. Anyway, I'm long on this one. This is the pound against the South African rand. And I was hoping we had some reversal candles on, this is a weekly chart. Let's go across and have a look at the daily chart. We had a big bullish candle there, probing that downward trend line. Lots of support around here. A reversal candle there, drop back down, another big reversal candle up to the trend line, a drop back down, and that's where I got in on the drop back, a retracement, I thought, to this attempt to break through the trend line. So often it's called a 1, 2, 3 trade. So you get the rally, a retracement, and you get in on the retracement for the second rally. Well, the second rally didn't happen. We've dropped back down a little bit. So, but as long as we're in this pattern, there's nothing really to do. And my stop losses are quite a long way below here. And we'll wait and see what happens. So if you're in that trade, give it some space. We've got a very strong upward trend line here. This one, if I can, that's why I had the weekly chart on. Oh, there we go. You can see on the daily chart. So we've got a very strong rising trend line, an overall weak currency against the pound and the dollar and against other currencies. So, and against Bitcoin, actually. So even despite Bitcoin's, well, it's strengthened a bit against Bitcoin, but not as much as it has against the others. So we're looking really for a break up through this trend line. My take profit area is at around 21.7. That's over here. That's where my take profit is at this resistance level. So nothing much to say on that. I'll keep updated on Twitter on this, and of course my subscribers. So that's really it. Back to the trading view charts. I think we've covered everything. We've covered Nasdaq, dollar yen. That's these two. There's the Nasdaq. Those are the two that I actually took profit on the dollar yen. Then I got back in again. Took a nice profit on this drop down, but I'm back short again now. Took a lovely profit there as well. So Nasdaq, dollar yen, we've talked about. S&P, very similar to the Nasdaq. Gold, don't diddle in the middle. Bitcoin, holding above 20,000. Brent crude, looking for opportunities to buy on a dip into that area that we talked about earlier on in the video. This very, very nice support level. Horizontal line, rising trend line, Fibonacci level, and the general pressure on oil prices to stay fairly firm. So I think that's it. And then we also talked about make yourself a sticky note. There's my sticky note, so you can make a screenshot of that if you want and stick it up on your desk or your computer, whatever you want to do. That's my sticky note for the... oh, one more thing we've got to cover, forgot. What's coming up this week that's of importance in terms of news. You can go across to myfxbook.com and get all of this. They send it to you for free. I use them for tracking my accounts, but you can get it for free. There's only one thing that's really interesting. So it's called MyFX Book. MyFX Book. MYFX Book. Go and sign up there and you can get all this info sent to your inbox once a week. And it's really helpful, so you don't have to go searching for it for everywhere else for it. So on Tuesday, ECB Forum on Central Banking. They also mark, you can't see on the screen, they mark what's important and what's not. And actually, if you click on these things, I'll show you shortly, you can get a bit more detailed information on them. But let's just have a look. I should have taken the whole screen on this video capture. So next time I'll remember that. I was trying to make the video look a bit better. So on Wednesday, EC retail sales month on month. So if you click, that's Australia. If you click on these things, Japan consumer confidence. This is going to be quite important on Wednesday for the dollar yen. Let's just have a wee look at that. So consumer confidence. I think we're going to run into some problems here. Okay, so so it's around about 34, but you can't really see there. Whoops. Oh, there we go. So yeah, FX Book. The only thing is you get these annoying adverts sometimes, but that's okay. I'm going to see if I can just shrink this in. No, I can't. Anyway, that's consumer confidence. It's quite low. It's not great, but I don't think that's going to have any effect on the market. There are one or two things here. I think it's got to do with interest rates. Let me have a look. And I think it's on Wednesday or Thursday. There we go. So Fed Chair Powell is speaking on Wednesday, 3 o'clock my time, which is 9 a.m. New York, I think. Let's see what it says. Yeah, so this is so these are the and you can also get what other people are trading, by the way, on my FX book. So it's quite interesting. For example, on the dollar yen, the average short position is 1,000 pips away from the current price. Those people are in trouble. That's short positions taken at 125. We're now at 131. So that's a little bit better. I think it was like 1,300 pips last week. So anyway, nothing about Powell. But anyway, he's speaking on Wednesday, 9 a.m. New York. And then we've got the Bank of England governor speaking, same time. I think this is going to be the interesting period of the week. So that's Wednesday, 8 o'clock New York, Eastern time, 3 o'clock my time. And I think that's really all. And then we've got the jobs on Thursday as normal. Germany retail sales. So if you're trading the euro, I don't think we may not even be in the euro and the pound this week. I don't know. Depends on what happens, which I'll update on a daily basis rather than in advance. And inflation rate in France, Germany, unemployment, Italy, nothing really there. Euro unemployment, I don't think there's going to be much interesting news. And then let's just go across here. Yeah, and then Thursday we've got the normal jobless. So this is every Thursday, 8:30 a.m. Eastern, 2:30 p.m. my time. Jobless claims. It's every week on Thursday at the same time. Initial jobless claims. This is the important number. I think jobs are actually pretty good still. Yeah, so going to be around about 231,000. So pretty low. We've been up at, you can't see the right, but somewhere around here, 200,000, 230. This was, so it's they're expecting it to rise a little bit, but we've been right up here in the 300,000-400,000. So job situation pretty good. Not so good for consumer prices though, because too many people with too much work means too much spending, which means too much inflation. And then on Thursday, we've got the ECB president, which will be interesting as well. So Wednesday and Thursday, we've got various speeches from central banks. That's about it. But nothing. There's no. There are no numbers coming out. So what can we take away from this? I think now we're into Friday. There's not much happening. Yeah. Don't want to miss anything here. Italian inflation rate, euro inflation rate. Yeah, okay. It's not going to affect the dollar too much, probably. So that's it. So that's the takeaway from the news. So Wednesday, Thursday, we've got central bank speech day time going on from the US and from Europe and from Britain. So that's Wednesday, Thursday. So nothing in the early part of the week to worry about, and we can be trading more or less purely technically. So I think that's it really. I said this would be a short video, but now it's gone on for quite a long time. So as I said, please go and subscribe to or follow me on Twitter. The links are on the page on the right-hand side. Subscribe to this channel. And if you want to get my daily report in detail on all of these instruments, particularly the currencies, you can go across to my website link, which is also on the right-hand side of this page. Good luck for the week ahead, and I'll speak to you soon.